Hey, this is Elliot Wave Sage. Want to go ahead and do a market update. Like always, none of this is financial advice. Always do what's best for you. Just use this for your education and entertainment purposes only. So we had a really excited week after the Fed meeting. The Fed, was not as hawkish as people feared. In fact, if you were graphing, the Fed in terms of peak Fed, and tightness is on, let's say, the x-axis. The x-axis is time, and then the amount of tightness and rate hikes is on the y-axis. As you go up that axis, this is where you would say this is peak Fed. Wednesday, you actually saw the first dip down in Fed hawkishness, not just in talk but action. They did not lower rates, but they started in a program to help reduce, the Treasury long end of the curve interest rates. So that's positive for the market. And the way they talked is like they don't see another rate hike coming. So it was just very dovish, and so the market loved that. And it was set up for disappointment. And then the jobs report came out weak, which means Fed easing. The Fed also said in that meeting, which was interesting, they do not want another financial crisis. That actually came out of his mouth. So they are not going to tighten like 2008 that led into the '09 crash, where they were bringing rates down because oil got out of hand, and they caused the financial crisis, like that set the stage for Bernanke and Obama to come in and save the day. This Fed Reserve doesn't want a crisis. I think Powell does not want anything like that, so he will ease and fold and side on inflation before he collapses the economy or financial markets. So that was one comment that was interesting to me that was mentioned in that press conference. And the other one was, they also reminded everyone of their second mandate. Unemployment has to be a concern, not just inflation. And it almost got the sense that that would take priority over inflation, setting the stage for potentially for the Fed to loosen and lower rates, even if inflation is running higher, if unemployment starts going up. So, and that's what we saw in the jobs report, which is really why the market started going up as the unemployment rate went up. So if the unemployment rate keeps going up, that gives the Fed an excuse to lower rates, even if inflation's at 3% and not at their 2% goal. So that's what's going on. So I think in terms of peak Fed, we're like somewhere on the graph right over the hilltop where we're starting to come down. Now, let's go through the market and see where we are. The Dow Jones ended up being in a series of 1-2s, 1-2s, 1-2s. Anytime I see more than two of these, it becomes very tough to follow through on the upside, but this one it did. And now we are entering a wave 3. To me, it looks like wave 3 finished here, the first 4, and now we should get a series of 4s and 5s, and then a bigger pullback. Now, there is another possibility that this turns out to be some kind of 3-wave connector. That would end when this 3 ends here. So there's still more upside, but then when this 3 is in, there's a chance for a whole nother leg lower. So that's a possibility. But think about it. If they weren't able to get control of the market here and here and here, what news would have to hit for that to happen up here to drop it and then break the low? It would have to be some pretty terrible news that drops to cause a panic like that. So I don't think that's going to happen. I believe we're going higher. SPY, same thing. We had our buy area. This actually was a 1, 2, 3, 4, 5 impulse looking back at it, and very erratic price action. Here, a pump, a drop, and then we found the bottom, and now we're coming out of it, and then we broke the high. Really erratic. Traders are very confused. Fundamental investors are confused. But the way to trade that was not to trade this, was to buy here when I was saying this was the time to buy, and then it doesn't matter what was happening here. You're just watching and eating popcorn, because as long as your entry's here, you don't really care what's happening here, and that's how I've been trading it. So here we are grinding up. I do believe that we will continue higher. Now we have a three-wave move here, or a five-wave move. I've labeled it. What I'm saying is, if this was corrective, this would be 3, a connector, and now we need another 3. So we'll hit up 519, 520, and then is there a chance we drop all the way back down to break the low? There's always that possibility, but I don't think that's going to happen. The triple Qs is the same thing, coming out of the correction, looking for this inverse head and shoulders continuation pattern out. IWM, again, very bullish structure, a 1 2 1 2 1 2, and we're coming out of that, looking for higher prices. This behaved like we expected, just very erratic price action. And a lot of traders probably made a ton of money on this and also lost a ton, depending if you got the bet right. If you got the bet right or not. Hang Seng's been doing really well. It's been doing really well for us. Had the buy here, really nailed the buy exactly at the low, and essentially vertical. I mean, this is vertical price action. This is just easy money, and it should just continue. There's really no reason for it not to continue, and I do expect more upside, with the pullbacks. But I do believe we're in a new bull cycle in China. Then Bitcoin, I showed the triple correction. Looks like has come to an end. It gave this buy area on the triple here, and then we are now going vertical again. But like everything, there's always pullbacks. If you're looking at the shorter cycles here, looks like we've got like a 1, 2, and then we hit a finish in 3, 4, 5, and then a bigger pullback. So something like that. That's what I would expect. And again, inverse head and shoulders continuation pattern, trying to take shape here with a pullback, and then out, new highs. I've always given this setup on Linkcoin earlier. We did double correct down to another buyer against this low, and now we're coming out of that. We really want to take this high to set us up for a wave 3. And then oil broke down just like we want it. We had the shorts here. This was our sell area, and now it's breaking down. And honestly, I think oil will continue lower in essentially an impulse down and to this $55 area, could be as low as $50, and kind of the really bearish target of 45. Now that would be something if we can actually get down there. When we get down there, then the market is set up for another inflationary impulse higher. But I think what will happen in oil is we'll come out of it and we'll still be bullish in the market, but then oil will hit some tipping point where people will start to freak out because they notice it's getting too high, and then that's when things get dicey in the market again. But I think right now it's just oil should continue lower. It should continue lower for now, and we'll see how this plays out. Again, massive head and shoulders bearish pattern, continuation pattern forming. We really want to see that $70 break to get to that $55 break. So we hopefully can see this play out. That's the goal. We want to see this thing play out and break down. Silver, again, looks like it's in a bottom pattern. It's in also a nice wedge. Look at this wedge, and we're about to break out soon, and then that should mark the bottom. But we don't have confirmation of a bottom just yet, but it's close. But I do think we're forming a bottom in process here with like a double bottom. It is in a buy area. It is a triple in my opinion. Do what's best for you in a wave 4. And then we'll see if it can either extend or finish 5 and 31 and then have a much bigger decline later. Gold's the same way. Gold hit the triple area, and then it's essentially went vertical here and pulled back. Platinum, I've also gave a good setup. It's continuing to grind higher for now. And again, a lot of 1-2s, waiting for its 3 of 3 breakout moment. Dollar index, perfect setup. Again, was a nail biter. It held the pivot. It did not break our pivot, even though we still had a sell area here. And then we finally broke down just like we want to see. And now we should be in a dollar weakness pretty much all the way down to 1019. Now, when we get down to 1019, it'll be interesting to see if this triangle plays out like I have it here, or just dumps down to 93 and we put X here, right? Or I could put X here and relabel it. So this will be interesting to see how this plays out, because if we do come down with momentum and break this dollar drop will be very bullish for the market. It would be like, in my opinion, like blow off top like for the market. Crypto, gold, silver, every stock you love and own should pump. It will be like good times are here again, just like at the October lows, off those lows, or off the March lows. Like it's going to be a free-for-all in the market, in the bull side. And then when we get down here in this area, either we'll have all hell break loose in the stock market for a generational crash, if you want to call it that, where we complete the bear flag and come all the way back up to 122, or the bear flag's already broken, right? The bear flag's already done, and we break through the bear flag convincingly, and then we're in uncharted territory where the dollar index has this bear flag that breaks down from this high, from really this point, and then it just drops essentially over the next 20 years or so to 2040 down to 2420. So that would be the purchasing power of the dollar easily fallen in half or more. This will be rocket fuel for your gold and silver secular bull market, for those precious metals and crypto. This would be something where you would buy gold if this bear flag breaks down, and you'll never need to sell it until the 2050s and 24 late 2040s again. You won't need to worry about it's going to be a super inflationary environment with dollar weakness, but that doesn't mean everything crashes, because we have other stocks that behave like commodities that have pricing power that will rise, and we also know everything's priced in dollars, which means assets could actually rise in price during this situation. It's really when the dollar strength is when the market crashes. That's when we see the market crashes. So that's what I would be expecting. So that's a bigger, longer term forecast. Don't need to worry about that yet. What I'm worrying about is this. Right now we have a dollar weakness cycle. We should see more upside through the summer, and then going into the election, a pullback, post-election, a euphoria pump into 25, and then maybe some point late 25 we're down here, and then we get the hangover and we get a massive either crash or correction, and then the market will decide what to do longer term. That's my longer term forecast. But anyway, this is where we are right now. Dollar is pulling back, so everything's behaving like planned. The 10-year, same thing. We had the sell area. The sellers finally took control. We dumped, and now we're turning down. The interest rate pressure should be alleviating now. And technically, we had this sell here, and we patient in TMF, and it worked. And now we're down, and ultimately looking for 3.5, but we could actually get as low as 2.8. So pretty bearish in terms of rates, but bullish bonds. So not sure what that means from an inflation standpoint of what the Fed's going to do, but it looks like the Fed is going to be cutting rates this summer. That's what this is telling me. But then, like all good things, it comes to an end. And then, like I said, all hell breaks loose in the market as, again, rates will start to creep back up and then overtake this high. And then we head up to levels that seem unthinkable at the moment, maybe even as close as 10% for the finish of the cycle, then that's the sell-off. That's the dollar strength. That is late 25. We need to worry about that. Maybe 26, but around that time frame. But I do think we are now in a nice phase with some pullbacks, right? Election pullback here, and then we come out and we start coming out. So my strategy now is long the market. When we're down in this area, we want to start taking off risk and taking profit and start shorting bonds in this area. And then the dollar index, when we trade in this area here or in this vicinity, we want to also be out of risk assets and very cautious in this area. That's how I look at the trade in the market at the moment. Until then, there's no reason to sell. I'm looking to buy the dips, buy pullbacks, buy setups. I'm on the side of buy the dip, a bullish side. But when we're in these areas on the dollar index, the 20-year, the 10-year, the market is set up for a pullback and potentially a crash or significant pullback. And then the VIX, again, pulling back from this cycle high. All right, that's all I've got on the stock market, guys. So the market is very, bullish, as I showed you. It has the bond market on its side. It has the dollar index on its side. It is supporting this, and now the Fed is on your side. So if you're bearish, you're fighting all those factors, which is hard to overcome, and that's what's happening here. And then that's what I'd say with the market. If you're bearish, it's tough. You're going against the current, against the grain. The bond market is much bigger than the stock market, guys. If the bond market is rising because rates are dropping, that is helping growth stocks. All right. So before I go into individual stocks, like I said, where can we go from here? You have to watch for the three-wave move, right? The bigger three-wave move here, finishing, and then a drop, which would have to be some pretty horrible news, right, to do that. But I think that probability of that happening is like 20%, 15%. All right, let's go to individual stocks. I know you guys like Apple off the low, looks pretty good to me. Apple, bigger picture, had this flat, finished, and now we're in a new cycle higher. Hopefully we're entering wave 3 of the grand super cycle, as long as this low holds at 163. So a pullback, you may get a second chance pullback at Apple if you missed a move. If you missed a move, we'll see what happens. Let's check out some other ones. Amazon, we did have this X wave play out like we want it here, and then we got the dip, and then the 4 is in. So it was that quick, and then now we're in wave 5 of Amazon, unless we erase divergence, which actually seems possible that will happen. So this actually could be a 1-2, 1-2 in Amazon. So this may not be a wave 5. Tesla pulling back. I gave the second chance entry here in Tesla at 169. There's your connector wave. You did drop. You could still be this connector, so we could still see another drop down. So let's give a new area because we do have a better look at a connector, which we didn't have before. So that gets us now a little bit lower, 164, 160 would be the area in this area as a second chance entry in Tesla, but the way this market's trading, that may be the two. But I think for now, if I was trading Tesla, I would just wait on the sidelines, and if the market gives you a drop down to this 160, low 160 area, then I would pick it up against 138. Adobe's looks like it's finally pulling out of its buy area, and it's been it's testing your patience, and hopefully we're coming out. AMD does not look healthy, guys. We have a three-wave move. Now, we did have a small pullback in a low, so I'm going to actually change the labeling on this to a five-wave move here down, which would be more appropriate. And then this will align with the market better, that this is A, and we get B, and we get C later. And B probably we'll probably do something like this. I'd be really surprised to see it take this high out, given this structure. But to me, it's not really a tradable or buyable stock. There's other things to buy because of this look here. Well, how did Microsoft do? We did get that dip here. It never made it to 378. We got to 387, but it is still in the downtrend with a connector. So Microsoft's still not out of the clear. But if Microsoft could drop to 378, that is a great dip buy here. 378, 369, guys, is a great opportunity. I think do what's best for you if you're going to play that or not. We'll have to wait and see. See if we can get there. Nvidia is still trying to come out. We took that high out, looking for 1,000 or higher, and then a bigger pullback, probably timing with AMD's pullback. Palantir is coming out of our buy area, real erratic, but we're making it out. We should be given some separation hopefully next week with all these 1-2s. That could be still an impulse. We'll have to wait and see if that's not another 1-2. It's probably another 1-2 here. Then let's just looking through I'm not going to look at every single one, just the big ones that I know everyone likes to trade that I've mentioned. Robinhood responding with Bitcoin. It seems to be trading with Bitcoin cycle. How's China doing, guys? Baba, amazing gains, guys, in Baba. I mean, we bottom ticked this thing at 68. We called essentially the day. Like, go watch my tweet, guys. I tweeted the minute after I bought it myself, and essentially it went vertical, and it's really still in its first impulse. I think it's safe to say you could back into a low now, because let's look at our bigger cycles. As you can see, you have a daily cycle break ending this correction since January 23. I mean, we're talking a correction that's been going on since January 23 is now over in Alibaba. So this is a major low, guys, major bottom. So more than likely this high at 124 is going to be taken out, and which means this pattern will play out, will break out, and I wouldn't be surprised to see 168 in the next 12 months, which means this will form a bigger connector for the entire move, which means this will be the go to zero. This is a backing into the low pivot. So I'm super bullish, guys. This is going to carry the stock market. Why is China so bullish? China's numbers are coming in okay now. Maybe they're turning the corner. Maybe China's turning the corner and things aren't so bleak with their economy as people had feared. But good. And then Baidu, same thing, vertical price action. We got the news Tesla partnered with them. Did I know that news was going to come out? No, no one did, but the news came out, but we were already long out of this wedge. We back tested the wedge here, and bam, we're out, and we should just get that follow through. Of course, there's pullbacks. We have divergence, so watch for this extended fifth. Could get retraced again all the way back to 103. Be careful, because this is an extended fifth. Unless we can take that divergence out, we get another 1-2-1-2, which is what I'm hoping. But everything else has been working really nice. And then everyone's been asking me about YNN, and we nailed that. I mean, look at this, guys. I mean, bam, out. And that's great. And again, we really traded this well. A lot of people were charting like inverse head and shoulders, but we got in at the head of the inverse head and shoulders, guys. We got in YNN back here, and then even back here. I mean, we got in. If we were following me, we were getting in here. if you were getting in YNN. Now I decided to play it through stocks, but you didn't have to. You could play it any way you wanted. And now you got some nice pivots to trade off of on the bullish side. Great. So that's nice. Okay, let's just look at some other stocks, crypto equivalents. The issue I have here, okay, Mara, we're predicting this pullback. We got it, and now we're coming out. I'm hoping to see 23, but I'm expecting that to fail, to go lower. Okay. MicroStrategy formed a new connector, so we got to redo that chart. See, there's your connector here with divergence. So this is 5 waves down, guys, which means, it means a couple things to me. It's either an A, B, C, and we go lower, or it's a flat, and it's a major low in the stock, a major cycle low for this entire move. Looking at the RSIs, it looks like to me there's divergence at the peak. I don't think I would label it as a flat, because I don't think this is a flat. I think it's a 1, 2, 3, 4, 5. So if that's the case, what that's telling me again is a big bounce, but it's a bull trap. We do that, something like that. Okay, be careful out there in crypto. Why do I show that? Like, well, I thought you're bullish Bitcoin. I am bullish Bitcoin, but Bitcoin is in a wave 5, guys. Here, when this wave 5 hits, right, what happens? You get wave 1, and then guess what? Wave 2 should come all the way back down, at least back down to 55,000, but it has the potential to do like a little flash crash type thing, and it may, looking at support and resistance area, we may see 48,000. So on a wave 2, let's just assume this plays out. I mean, even the 50 back is 47,000. So I mean, that's probably how I see crypto, guys. Just like this, and then we get the mega, the super bullish. Everyone goes crazy. That's how I look at this. That's to me, this is 50-50. This happens. The other option is we break higher and then we just run, which would mean MicroStrategy's count was a flat. So right now, I look at MicroStrategy, I look at Mara, I lean this count. I lean this count in crypto. So maybe it's maybe 60-40 odds, but it's something you got to keep about. So, you gotta like think about what you want to do here. Do you want to hedge, right? Not take off your long positions, but hedge something, in case this happens. But more than likely, this will be dollar strength. So maybe you do a long dollar play, but keep your Bitcoin position on or something. I don't know. Do what's best for you. Healthcare. I'm liking Lilly's pullback, guys. That may be a stock I buy on Monday. If we get this if Lilly could stay supported against 1717, I like to buy it here against this low for this wave 5. Maybe to $880, $900. That's what I'm looking for. Now, if this low breaks, then it gives you a great opportunity again to go long an area. At 711 here. So we'll have to wait and see how that plays out. But keep Eli Lilly on your crosshairs on Monday if you're trading, because I like the setup, but I wouldn't be surprised to see a gap up and and not give you the opportunity where we're traded, higher. But if the market, opens low, opens here, opens down below this, that's what I'd be looking for in a flat. Pfizer broke out of the wedge. I think investors have said enough's enough with Pfizer. We're finally breaking out. Break of the wedge is good because that probably signals the low. We're back testing it. So we need to see if we fall back in or not. If we can get some continuation, then yeah, then the 2 is in. The 2 is in. The 2 is in. A historic low, generational low in Pfizer. Okay, then let's go to some other, let's do discretionary. Consumer discretionary, guys, mixed picture. It's weak in a lot of areas, but hey, Carvana is pumping, right? Again, Carvana is something we nailed multiple times, guys. Like, look, we called the bottom here. I mean, we called it. We had the bottom here at 306. We hit 354, but I had this box here when we were traded. So we essentially knew with bottom that we had the new bull cycle. Now we also had another bottom call here at 42, and it hasn't looked back. And we've erased divergence. So guess what, guys? What does that mean? It's another 1-2. So that's why you can't short these wave fives, guys. You can't short these wave fives in these bullish cycles because they just keep extending. Like an Elliott wave guy would say, oh, it's 1, 2, 3, 4, 5. I'm so smart, I'm going to short it, and then they get their face blown up. So you can't short the trend in the opposite direction. So here we are. Good job, Carvana. I don't personally like the company, so I won't buy it because I just can't get behind the company. I may day trade this thing, but I'm not going to hold it for the long term because I just don't believe in the company. But hey, it obviously is making money, so people use it. And good for you guys. Lululemon's in this wave 4 now. When we get this wave 5, that'll be an interesting setup in Lululemon from an Elliott wave standpoint here. At 318, 303, assuming we don't erase divergence, we need to watch it to see how this plays out. But if we can hold this area, I expect a counter trend rally, and then either a spectacular failure or it was a run-in flat and it's a major low. It's a very, very tough chart to trade. It would be very much like gambling, buy-in here. Because like I just mentioned, you buy a wave 5 in the trend. It could be a 1-2, 1-2 setup. We break a historic downtrend line and then it just dumps and you get blown up. So I don't like trading it, but this is where the chart is. If for some reason the market decides to take it all the way down where I have this box, then it would be a historic investment opportunity for Lululemon. Nike is something else too that I mentioned on my channel here. Nike, where do I have Nike at? LM there. So Nike, we backed into the low. We really have to hold these pivots. If we break these pivots, I would dump it. I would get out of Nike. I would not hold it if we break those pivots. Starbucks is another one that is really struggling. I had to look at this chart really closely. Right now there's only really two ways to label this chart, guys. A 1-2, 1-2, 1-2. But the momentum is so strong to the downside. We broke this low. The sentiment is historic. We had the lowest, the biggest drop we've ever had since I think it was like the .com era or the March 2009 lows or something crazy like that. As you can see, we broke these lows, say we corrected the whole ground super cycle. So my guess is we're actually correcting the whole ground super cycle here, and we're actually in a bigger wave 2. And this labeling is really, I put a 5 here and I put the 1 there because of the RSI sequence. And then it's something like 1, 2, 3, 4, 3, something like that. And then we have a nice 3-wave move down, which would bring us to 57.43. So I don't like it anymore. So there was a box at 75.76. I dumped it today at 73. Lost the buck on it because I just don't like the setup anymore. And I don't like what I'm seeing. I think it's going to push lower. But if you're really an aggressive trader, you would stop out at 68, 78. And then if you're super aggressive, you would just buy here and then buy more here and then load the boat if it comes down here and then you've got a generational position in Starbucks for, to tell your grandkids about, or give your, inherit, your grandkids can inherit. So because Starbucks, guys, let's face it, it's going to be around. It's not going nowhere. It's like a McDonald's, right? It's, every these things crash. Chipotle crashed here and there. These stocks crash here and there. So this is just, it'll get out of this funk. So I'm going to be waiting on the sidelines. It doesn't work in my system, but you got to do what's best for you on that. Commodities, again, working nicely. Chevron hit the short area. We've been trying and boom, and dropped. So again, we're looking for this dump in energy. We really need to see some capitulation in energy. I want to see that. I think the jobs numbers are going to spook people in the sense that they're going to say, oh my gosh, maybe the economy is falling apart. And remember, bad news is good news for the Fed, and lower rates means higher tech, higher growth, which means higher stock market mostly. So if this bearish wedge broke down today, we'll see follow through next week, and that's what I want to see. I want to see that follow through on Chevron. I want to see it on the XLE. I want to see this follow through down. And again, we had these sells. They just took time. It took a lot of patience, but bears took control of this. How's Occidental doing? Again, looking for this pullback. I do think when energy's down in these areas, we got to be more careful about the stock market, guys. Interest rates. I do think it will come out and be a stealth bottoming, and then it'll catch everyone's attention, and then that's what I'd be worried about. Gold miners. Okay, a lot of people are in these, and again, I like the 1-2-1-2-1-2 setup. Now, there is a possibility of a dump down to 38 with this being a connector. There is that chance. But you'll have to figure it out. But do I care? No, because we bought it down at 31. So I don't really care what happens here, which is why you have to buy it at these levels so you don't have to worry about getting pushed out of your position. So to me, this is just day trader battles. This is day trader battles here, battleground. Investor, swing trader, we could care less. Because it's not coming, hey guys, it's not coming back down here. So, yeah, okay, it drops to 38, big deal. But I don't think it's going to. But you have to do what's best for you on the GDXJ. GDX is the same chart, essentially. Silver buy area, this is the ETF silver. Hopefully we find support here. Platinum, PPLT, again, looks like it's consolidating, coiling in some kind of ascending triangle, bullish triangle. Hopefully come out of that. I mentioned watch that stock. What was it here? Cleveland Cliffs. Guys, Cleveland Cliffs. I said watch it. Watch Cleveland Cliffs. I think they had a big insider buy or something. They had said this was the area. And look, so Cleveland Cliffs could be a huge opportunity in Cleveland Cliffs here, guys. If it does want to continue a little lower, I mean, that is just a great gift. I mean, if this wave 2 wants to push lower, and it sure as hell can, it could still drop it could double bottom. I mean, but this is a great opportunity in a stock that could give you a lot of upside, potentially. They use finding support like we thought, and if we can come out of this wave 2 and hold this structure, we could have one hell of a wave 3 to $10 or higher. That would be nice. Also, lithium, guys, the price of lithium. Global lithium battery ETF. I guess this is in a buy area, just so you know. So that's turning the corner. And I think I have Piedmont Lithium is in a buy area. So lithium makes sense, right? Tesla's bottomed. Lithium may have finally found the low here. If you believe in that, right? Buy. So these are in buys, right? Lithium. This is a some kind of bottoming pattern here. So something to keep an eye on. I'm not taking lithium trade because again, I don't believe in the EV trade. If the oil's dropping, I could be wrong, but it would be really unusual to see oil drop and the EV market pump. So, but the chart's the chart. Maybe the dollar weakness will help to overcome this. Like I don't know the dynamics, but I'm not taking the trade. I'm not taking this trade, but you guys could do what's best for you. But technically, this trade is here. It's ready to be plucked if you want to take it. So, consumer staples. How's Costco doing? Stuck in a connector wave. Stuck in a connector wave. In my opinion, looking for 657. Celsius formed a connector wave on a 5-wave move down. So Celsius, this is shallow connector. This is shallow connector. Hopefully we can get some more upside, but I'm looking for whenever Celsius pulls back now to buy it again. So the setup's lost. It's in a connector because it's 5 down. Monster playing out like we thought it would in this flat. Want to see it drop to 43, 41 for potential long-term investment opportunity in a generational correction. Super cycle correction. So if the staples are weak, that may be the market's more bullish, risk on, because sometimes the staples don't, perform well and risk on. And deflation means they can't pass their costs on to the consumers to raise revenue that way, but it should help their margins. So we'll be interested to see how the investors interpret this type of environment. AHR is another one we've always been following on our channel. How does that go? We haven't looked at it in a while. So we could get this wave 4. Looking for one more low. One more low. And if you're brave enough, you could try to buy it. Get that one last little flush down. All right, so that's all I've got today, guys. Tonight I'll try to do a live stream later tomorrow or at least Sunday to answer your questions. I really hope we could get a nice breakout on Bitcoin, but it does look like we should get a pullback, and that breakout will come next week sometime. But I want to see some more upside. I want to see some crypto upside, and that will help. The dollar. That's telling me the dollar is going to get weak, and I want to see silver run. I want to see this wedge breakout. So going into Monday, I like Eli Lilly trade a lot, guys. I really like that trade a lot on Eli Lilly if it can do that. And then if Tesla can drop a little bit more, I like that Tesla trade as well. So Eli Lilly, Tesla, I like those ideas. I like those trading ideas, guys. And then keep an eye on Microsoft if it can drop a little lower for some reason. Not sure why. I don't know when it's earnings. I have no idea. I don't follow the news that much. That's what I look at, and then we'll go from there. All right, guys, that's all I got.